Good afternoon or good morning, wherever you might be. We're thrilled to have you joining us. Thanks for being here today. We'll give people a couple of minutes to keep showing up. In the meantime, will you help us? Let's make sure that chat is working for you. We'd love to know one of two things, either where you're joining us from, or tell us about your nonprofit. We have a nonprofit focused group here and topic today. We'd love to know about the community or the groups that you serve. Help us know who we're interacting with today and what your organization is focused on. Let's see if that webinar chat tool works for you. We've got a good sized group so far, a quiet good sized group. All right. Well, we appreciate you all being here today with us. Thank you for joining. We're here today to talk about protecting your nonprofit and a practical way, practical guide for payment workflows and governance. My name is Logan Mallory, and I am here with Omar Visram, who is the founder and head of growth at Ankle, which is an accounting practice that is completely focused on nonprofits like yourselves. And I am Logan Mallory. I'm here from Pluto, and Pluto is an accounts payable software that makes your business easier. I'll hand it over to Omar to talk about his organization and how they help, and then we'll come back to me.
Thank you, Logan. Really appreciate that introduction. For those of you that don't know, at Ankle, we work extensively in the not-for-profit sector, and it's really all about helping organizations gain clarity and confidence with their finances. Today, we serve about 300 clients coast to coast. We really think of our organization in two distinct divisions. One is financial operations. So, financial operations are the transactions that need to be processed throughout the year, bookkeeping, accounts payable, payroll. And then financial management is the CFO advisory and controllership services side of the organization. I also want to acknowledge that our offices where I'm located today in Vancouver are situated on the unceded traditional territories of the Musqueam, Squamish, and Tsleil-Waututh nations.
And I'll give you a brief overview about Pluto. As I mentioned, Pluto is a payment automation platform. We work with accounting firms and their clients to help streamline your accounts payable and receivable, and we do that in a secure and easy to use solution. Really, the offering that we help provide is less manual work, less risk, and less human errors, which we'll talk a little bit about today. But we do that through automated workflows and built-in controls and seamless accounting software integrations, all of which are typically very important for nonprofit organizations. Pluto is headquartered in Toronto. We work with over 14,000 businesses and organizations across North America. And as you can see from that bottom row of rewards, we do a really good job of it. We work we work hard in order to make this an easy to use software that our customers love. And so that's a little bit about Pluto, and you'll learn more about us throughout. Today, we've got a couple of items that we're going to really focus on, and we hope you come away with some meaningful learnings and some meaningful insights. We're going to talk about identifying and preventing fraud schemes. That is happening left and right. And we want to make sure that you're alert and know what to look for. We're going to talk about governance and segregation of duties and what that means for your nonprofit. And we're going to talk about modernizing your payment flows. That is as a important part of reducing risk for your organization. The common theme, and this is our on the next slide, Omar. The common theme here is that the challenge of manual processes and risk. A lot of nonprofits, as both Enkel and Pluto work with with organizations like yours, we're still managing finances with a really manual process and informal controls, and both of those create real risk. There's fraud exposure. Those weak controls mean that there's the possibility of internal fraud and embezzlement. There are governance gaps caused by manual processes, and it creates concerns with your board or your auditors. And then there's the time drain, right? You have a limited amount of people and resources that you can put towards any problems and any given problem. And if they are spending time on manual processes, that means they're spending less time working on what your core mission is. And so we recognize that as a really big challenge that many nonprofits are up against. We want to get then I do see the chat going, and so thank you for jumping in there. It's great to see that we have people from all across Canada, and glad you're joining us, and it's fun to see where people are from. We're gonna now, if you'll use this interactive poll, the chat is clearly working. Let's make sure our polls are working. We want to understand a little bit about this specific group. Will you let us know what your biggest financial management challenge is? We've got four options for you. I'm sure there's more possible answers, but will you pick one of those four? Maybe it's a manual process that takes up too much time. Maybe you really are concerned about that fraud or errors. Maybe it's the preparation for your annual audit and providing that documentation, or getting timely information and reports to the board. If you were picking from those four, go ahead and just click one of those if you're able to. And let's see what this group is up against, or what you're facing. All right, really interesting. We have one outlier and then a little bit of an even split. So, definitely a lot of concern about the manual processes. 44% of the people that responded are worried about how much time those manual processes take. And then, kind of I guess not exactly even, but a smattering across those other three. 25% worried about fraud and errors. 19% worried about the annual audit preparation, and then the remaining 13% are worried about getting timely reports to the board. We appreciate that. Thanks. That allows us to think about how we talk in real time as we go over some of these topics. Omar, I think this is a great place for me to hand it over to you.
All right, just on that note, manual processes taking too much time. So about 8 years ago, I had early days of Ankle. I had a client who came to me, a not-for-profit, and they said, we drive checks around town to get signature from the treasurer and the executive director. None of them were in the same place, and so this operations person is driving checks around town. And I thought, there's got to be a more efficient way of doing this. There must be a tool, and that is literally when I did my first Google search and found Pluto. So the scary thing is I still see this problem everywhere. We talk to potential nonprofits coming in a lot, and many are still driving checks around. So this is just the beginning of it, but Pluto can really help to solve that problem for you. All right. When I saw these stats, I almost didn't believe them. So the cost of fraud to nonprofits is staggering. It amounts to about a 5% annual revenue loss. Organizations lose an estimated 5% of their annual revenues to fraud every year. The impact is 2 times greater on smaller organizations. That's organizations with less than 100 employees suffering median losses nearly twice as high per scheme. And 50% of these frauds are the result of weak controls. The median loss per incident ranges from 60,000 to 100,000 per incident. These numbers are definitely staggering, and we're going to take you through some of the common pitfalls, challenges, and also opportunity to protect your organization against these types of numbers. So the top five fraud schemes and nonprofits are here. So billing schemes, whereby payments for fictitious goods and services are inflated, invoices or personal purchases are expensed. Payment tampering, so altering checks or manipulating electronic payments to divert funds. Expense reimbursements, so claims for personal expenses, overstated amounts, or fictitious items. Cash skimming, theft of cash before it is recorded in the organization's books. And false financial reporting, so intentional misstatement of financial records to deceive stakeholders. So let's dive into each of these in a little bit more detail. So, billing schemes, which are the most common form of internal fraud in nonprofits, what are they? Well, billing schemes involve a situation where an employee causes the organization to issue payment for, like I said previously, fictitious goods or services, inflated invoices, or personal purchases disguised as business expenses. So, what are some of the steps that you can take in order to prevent billing schemes in your organization? One is purchase order system, so requiring POs for all purchases that match invoices against approved orders before payments. Secondly, and any auditor that you would have spoken to would tell you about the segregation of duties, ensuring the person purchasing the goods is different from the person approving and paying for the goods. We're going to have a lot of coverage on segregation of duties just up. And then vendor due diligence, so implementing independent approval processes for setting up new vendors in the system. And then finally, budget reviews. So reviewing your financial statements against budget on a monthly or quarterly basis, and looking at spending anomalies and variances. Let's keep going here. Payment tampering. So how does it happen? Well, check alteration is one method. So intercepting outgoing checks and changing the payee name or increasing the dollar amount. Outright check forgery. So creating fraudulent checks using stolen check stock and forging an authorized signature. Or electronic diversion. So altering EFT batch files or changing vendor banking details to divert funds to a personal account. Now, a common thread here is checks. Checks are ultimately prone to fraud. To the extent that you can minimize check use, do so. Some prevention strategies here. One are secure physical check stock under lock and key. Of course, just a physical control if you do have to have checks in your organization. Implementing positive pay with your bank. This is something you might want to research. It is available with most Canadian institutions, requiring dual approval for all electronic transfers. This is a key one, and it is available in Pluto. We'll talk about how it works. Segregating payment preparation from approval. So again, segregating between payment, the person who prepares the payment and the person who approves the final release of funds, and reviewing bank statements and reconciling bank accounts regularly. So these are some prevention strategies that you should really think about. A lot of them become built in when you start using great technology and when you have really good workflows around accounting in place. Expense reimbursement. So I'm going to draw your attention right to the stat in the box on the right-hand corner there. So expense reimbursement fraud accounts for 14% of all asset misappropriation schemes. That should say in small nonprofits. Some common tactics: one, mischaracterized expenses, so claiming personal meals, travel, or gifts as business-related expenses. Overstated expenses, so inflating the cost of actual business expenses. And multiple reimbursements, so submitting the same receipt on multiple occasions. So some best practices to consider here. One is requiring original receipts. So never accepting credit card statements or credit card receipts alone. Require itemized receipts. Enforcing policy limits. So setting clear caps on meals, travel, and per diems. Timely submission. So requiring reports to be submitted within 30 days of the expense. This is a really simple one, but I would strongly encourage that if you don't have this policy in place today, that you implement this. And finally, reviewing trends. So monitoring for employees whose expenses consistently sit just above or sorry, just below approval threshold. So again, this is one of those, I would say, judgment-based items, but have your guard up and really consider that as you're reviewing expense reports. Let's talk about skimming and false reporting. So cash skimming, and ultimately defined as theft of cash from a victim organization before it is entered into the accounting system. So one thing I just want to add here is to the extent that you can go electronic, do go electronic. We often hear, there's a cost associated with credit card processing or electronic processing. Yes, there is a cost, but in aggregate, that cost ends up being less than the cost of potential misappropriation through cash skimming. Vulnerabilities, so fundraising events and galas are highly prone to cash skimming, cash donations, door fees, thrift store sales, or any kind of social enterprise that you might have where there's a lot of cash at play. The controls you want to have: two people must count cash together, immediate recording, and ultimately, like I said, encouraging non-cash donations. False reporting, the intentional misstatement of financial statements to deceive financial statement users. Of course, the motives are to hide other theft or losses, meeting grant requirements, or inflating performance metrics. These are often perpetrated by people who are involved in the finance function, just because they have to be able to manipulate the financial data. Controls that you can implement: independent external audits, of course, board review of statements, and variance analysis. All right, let's talk about some red flags or some warning signs to watch for. Um, Fraud ultimately often reveals itself through behavioral and financial anomalies. So, what should you be on the lookout for? These are some of the qualities. Again, these should just get your sort of spidey senses going. None of these in and of themselves would, um, directly indicate fraud, but these are signs you can look for that may be indicative of potential fraud. So one would be refusal to take vacation, employees afraid to leave their duties for fear that a replacement will discover their scheme. Of course, there could be other reasons for it, but one item here. Living beyond their means, so sudden lifestyle upgrades, new cars, jewelry, homes that don't match one's salary. Possessiveness, an unwillingness to share duties or to let others access financial records or mail. Missing documents, so frequent lost receipts, invoices, or inability to produce original documentation. And this is where, when we were talking about expense reports, having those policies really clearly in place so that you can quickly take action when you identify a situation like this. Excessive voids and credits, so a high number of voided checks or credit memos issued without clear justification. Static assets, so inventory or assets that remain on the books but don't physically exist. So, wrapping it together, building strong governance often feels like an administrative load, but it isn't just about paperwork. It is really the essential framework of rules, relationships, and processes that protect an organization's mission. The foundation of all of this is in the segregation of duties. A few key considerations with respect to building strong governance would be fraud prevention, so establishing clear checks and balances to ensure that no single individual has unchecked control over financial assets. Audit readiness, so documented workflows and approvals, and ultimately driving donor confidence. So strong internal controls, give you the opportunity to demonstrate stewardship of the funds that you are being entrusted with from donors to your board and various stakeholders. So let's dive deeper into the segregation of duties as the foundation. So ultimately, no single individual in the organization should have control over two phases of a transaction or operations. This is not about trust. This is really about best practice. And I want to stress that. It's not that you don't trust people, it is just best practice to have an appropriate segregation of duties. So let's break it down into three stages here. The first being authorization. The person who approves the purchase or expense, for instance, the program manager, should not be the person who enters the transaction in the books. That should be perhaps the bookkeeper or the accountant. And the custodian, the person who signs the checks or the release of funds, would be, say, the executive director, the treasurer, perhaps both approve, but neither should be involved earlier in the chain with the ability to authorize or record. So just keep that in mind, these three critical stages. Do you have different people or at least multiple people involved to prevent segregation of duties challenges that could lead to fraud in your organization? Some common governance pitfalls. And to some extent, this first one here, the rubber stamp board, so the board that approves financial reports or large expenses, and blind trust, these two really come about really out of a sense of trust that is sometimes built over a long period of time. But ultimately, you should not lean on you should not have a situation where the board just feels that they have so much trust in management that they can rubber stamp transactions or just out of blind trust let the employees or the management team run the organization without oversight. This is a critical failure and often where the cracks start to form. Management override is another situation that is important to monitor. So executives who bypass established controls to get things done quickly. This sets a dangerous precedent. Yes, you want to move fast. You have a lot of work to do. You have limited resources and time, but there is a reason for the controls to be set up in such a way that the segregation of duties exists. And finally, lack of financial literacy. So, board members or executive directors who cannot read a balance sheet or income statement, or who may end up missing red flags. So, you may want to consider here, training up your board, leveling up their skill set, or that of your executive director to ensure that the appropriate level of financial literacy exists. So, what is the board's role in financial oversight? Ultimately, strong governance starts with active board engagement. If you've attended any of my webinars in the past, you've probably heard me talk about the board not being actively involved in managing the organization. You want to keep your board in a governance capacity wherever possible. Sometimes it's not practical to do so, but you don't want your board members dabbling in the finances day to day. That said, the board is responsible for ensuring strong oversight and accountability. So their key responsibilities would be reviewing financial statements regularly. The board should review financial statements at least quarterly and question variances, look deep into the financial statements, and ensure that management is accountable for those variances. Approve major financial policies. So this includes approval matrices, expense policies, and payment authorization rules. Ensuring strong internal controls. So the board should confirm segregation of duties and review how payments are approved. They should monitor financial health, track cash flow reserves, and key financial risks. Again, not preparing the financial information, but reviewing the financial information and ensuring that these checks and balances are in place. And finally, supporting audit and compliance. So overseeing the audit process and ensuring recommendations are addressed. I just want to be careful here. while we say overseeing the audit process, it's really at a high level. Management is responsible for the execution of the audit. So making sure the auditor gets all of the pieces that they need. But the oversight should come from the board. We're going to, in this next section, connect the dots between some of what we've talked about and some of the functionality in Pluto, because I think this is really key. At Ankle, we use Pluto extensively with our not-for-profit client base, effectively whenever we're processing payments or assisting clients to process payments. So, how can Pluto help you ensure an appropriate segregation of duties? Well, ultimately, what happens when you are setting up new users in Pluto is you have the ability at a very granular level, as you can see on the screen here, to manage company permissions, what somebody can and cannot do. Of course, this needs to be tailored based on a person's role, based on a person's understanding of finance and such. So there is a lot of granularity here, but you can, for instance, limit a person's ability to edit bank accounts while they might be able to add or edit users. So that would prevent a situation where a person can, create a fictitious user or a fictitious vendor and then add their bank details or change the bank details on an existing vendor um, to their own bank account, as an example. So again, this can be done at a very granular level when you're setting up new users in Pluto. Authorizations and approvals. So establishing clear policies and approval matrices um, is something that you'll want to have documented. And again, approved by the board, it should be documented. But you can effectively implement those rules within Pluto. So, what we often see here is a situation where an executive director can approve everything below a certain threshold, and the treasurer has to approve everything over that threshold. And only once both have approved all items that they're required to approve will the funds be released to your vendors. So, again, a lot of granularity in how you can effectively automate that approval matrix. Reconciliation. So, one brilliant feature of Pluto is the two-way sync. So, the two-way sync exists so that on the one hand, data can come out of QuickBooks or Xero and go into Pluto without requiring manual data entry of transactional information that has already been entered into QuickBooks or Xero. So, the expense flows one way. It can then be paid, but once it's paid, Pluto will notify your accounting software that the payment has been made. So effectively automating that reconciliation step. So the ability to stay up to date on your reconciliations becomes much easier when you're using Pluto. And then documentation. So this is often not an issue until it is an issue. And you are, talking to your auditors and they want to see the audit trail for transactions. Well, you get a beautiful audit log like this on every transaction. And then physical and system controls. So we talked about, locking up your checkbook. Of course, if you are automating transactions, you won't have that problem. But effectively, Pluto prompts you to build these controls, to have dual signing authorities, to have approval workflows. It's all built into the way that Pluto is set up. So you will be prompted for these controls as opposed to having to make sure that they exist in a manual environment. So, where do manual workflows cost you? Well, we saw in the poll at the beginning, operational efficiency. Efficiency is one of the biggest concerns. Well, it costs you in operational efficiency. Finance teams end up spending hours on manual data entry and check runs. Executive directors waste time signing physical checks and perhaps even driving checks around town. Also, the lack of visibility. There's no real-time view of cash flow or pending approvals. Invoices and checks get lost in desks or in the mail. Human error and risk. So manual entry increases the risk of coding errors and typos. As I was just explaining, the sync between your accounting software and Pluto allows the information to flow back and forth without being duplicated. But where you have human intervention, there's always the risk of error. And then audit complexity. So scrambling to find paper trails and approval emails at year end. All right. So modernizing your payments. The solution, obviously, I'm going to tell you it is Pluto, but Pluto helps you to automate your governance. It helps you replace paper routing slips with digital workflows that enforce your approval policies automatically. So it actually prevents situations where controls can be not followed. Enhanced security. So there's effectively three ways of making payments out of Pluto. There's direct deposit if you have the banking details of the vendor. There is e-transfer, but it's e-transfer without the upper caps, and those e-transfers are password protected. Pluto will also issue a check. They actually print those checks in their Toronto office and send them across the country. Those are more expensive, and of course, we strongly encourage you to avoid that unless it's necessary. But ultimately, the security that you get by implementing Pluto really helps to ensure that you will not become one of those statistics that we talked about on that earlier slide. And operational efficiency. So I've already talked about the two-way sync, but this is really a way for you to start to get more up-to-date real-time data and minimizing the amount of human intervention required. Pluto does sync with QuickBooks Online, QuickBooks Desktop, Xero, and Oracle NetSuite. So let's think through the evolution of payment workflows. If we're thinking about things on a manual workflow basis, you receive the invoice, manual data entry occurs, which puts the organization at risk of typos and errors. Checks are printed. You have to chase signatures. Also, those checks, physical checks, are subject to being lost, stolen, opportunity for misappropriation there. They have to then be stuffed in the mail, where again they can be lost. And then paper copies, paper documentation needs to be filed. In an automated environment, you are able to capture invoices using optical character recognition technology, where data is automatically extracted from the invoice. Expenses can be digitally approved, building an audit trail as you go through the workflow. Electronic payments are secure and verified, and then you have the automatic sync back to your accounting software.
All right, I'm jumping back in here. We'll give you a little Logan
Water break.
mood. That's right. So first of all, Omar, really great insights here, and I think it's clear how much time you've spent in the not-for-profit world and really understand some of the risks and obstacles to be thought through intentionally. I want to remind the audience that we do have a Q&A. You're welcome to use that question, that Q&A box, or put your questions in the chat. We already have some there. But let's do another interactive poll really quickly. We've talked a lot about transitioning and modernizing your payments. Will you let us know what you're doing currently? What is your organization doing when it comes to approving payments? Are you using email threads as option number one? Are you using a formal accounting software or literally paper and signing with a pen? Or are you using some sort of accounts payable automation? Will you pick one of those four options in our poll? Looks like it might have accidentally closed for some, and if that's the case, you can just drop your answer in the chat. Wow. Again, one little bit of an outlier, but otherwise those three are really close. We have essentially 22% on email threads, accounting software, and people using an accounts payable automation tool. The fourth option, which represented 34% of the responses, is paper and pen, like just a traditional signature. Really, really interesting there. And I do see a couple in the chat saying, hey, we're using Concur, some others saying combination of those. Thanks for helping us see what's happening there. There's, we've talked about the risks of this, and now we're kind of seeing the reality of where those risks might sit for your firms, and good opportunities there.
Yeah, great insight there. And also, I think a huge opportunity, right? Implementing AP automation software can bring such huge benefits, and there's so many of you that aren't using it today. So, huge opportunity. All right. So, getting started. Um, how do you get started to get on a path to secure your nonprofit's financial future? One, you want to assess the risks. So map out your current payment workflows, identify who has access and where the control gaps exist. Define the policies, so document a clear approval matrix, and determine the dollar threshold for board or dual approvals. And I want to say here, there's no one size fits all for what those thresholds should be. It ultimately comes down to there's an element of judgment, there's an element of perceived risk, and depends on the number and volume of transactions that are flowing through. Third, digitize. So implement a payment automation platform to enforce new policies and eliminate paper, and then ultimately monitor. Now, through our fractional CFO services at Ankle, we are actually able to help you through this journey. Getting your the first two steps particularly in place, and then bringing in Pluto to automate, what we've proposed there. The board's role in financial oversight, so having clear approval thresholds really helps to ensure accountability while keeping operations efficient. I want to stress that these are just examples. These aren't by any means the thresholds that you should have in your organization. The message, though, is no single individual should be able to initiate, approve, and release a payment. So, some key takeaways as we wrap up today. Fraud is a real threat. Manual processes and informal controls leave your nonprofit vulnerable to costly internal fraud schemes. And remember, as I said on that earlier slide, smaller nonprofits are at greater risk. Governance builds trust. So having a segregation of duties and clear approval policies are essential. They will help you build donor confidence, stakeholder confidence, and they will help you drive your mission forward. Automation is the solution. As you can probably tell, I'm so passionate about this because I really see the impact that it has every day on our clients. But modern payment platforms help to enforce governance, eliminate paper, and secure your financial workflows. Logan, back to you.
Back to me. Thank you. We have hopefully helped you see, and we're grateful for our partnership with Enkel and Omar and his team, and the joint customers that we work with together to help solve these problems. We realize that cost is a really important thing, and we want you to be able to experience Pluto and how quickly it can be implemented, how quickly we can have you onboarded and protecting your organization. And we want to be able to do that without any risk. And so, as a unique offer, if you're here today, we'd love to provide you with 2 months free of Pluto. There is a QR code that you can scan, and I believe Audrey from my team will be dropping a URL in the chat in case you don't want to go from computer to phone to computer. So we will try to get that URL directly. But either way, if you mention that you were a part of our webinar today, we'll definitely provide that 2 months free so that you can see what this looks like and how it protects your firm with a really light lift.
Fantastic. So, I've talked a little bit about how we support nonprofits at Ankle. Ultimately, we provide hands-on support to keep your finances accurate and compliant for whatever it is that's coming next for you. So at Ankle, we take ownership of bookkeeping and accounts payable. We also help you leverage technology to improve efficiency, to maintain strong controls, particularly in areas that are prone to fraud and control breakdowns. Our team works alongside your team to keep the finances aligned and to fill any gaps and strengthen your financial processes. So if you're interested in talking to us, please click on this link below. We will make it available to you in a follow-up as well. We would love to chat with you about how we can support you. All right, let's dive into Q&A, the fun part. I'm going to close my screen here just so we can all see each other better.
Excellent. It's nice to have the big picture view here. All right, we've got a number of questions. I hope people will continue to submit your questions as we go. There was a little bit of a theme, Omar, around board members, and we had a couple of questions that were oriented around how to engage your board members the right way. You mentioned, take the time to train up the board. One of our audience members asked, how do you motivate board members who say, I'm not a numbers person, I get completely lost, etc., and refuse to develop or refuse to participate in developing the annual
Yeah.
budget? Any thoughts there?
Yeah, that's a tricky one. So there's a few things that you can do. We actually have a lot of resources on our website. If you go to our library, Enkel's library. There's a lot of resources for board members. Ultimately, what we've done a number of times is we've done board training. So the basics of reading financial statements, that can be one that really helps. You have to get their buy-in in some shape or form. And ultimately, you have to explain to them that it is their responsibility. The other side of it is there's often this perception that like finance is hard. You need to make it easy for your board members to get access to information, like get access to the income statement and balance sheet, and then also have summaries, having financial summaries or visualizations. We did a session last month on dashboarding. If you can tell the story visually, you can start to break down that fear and that barrier around numbers.
All right, I like it. Thank you. Let's see. I was trying to find the other questions around this theme for a moment. Um, One of our audience members talked about they had a role as a treasurer on the board, and others on the board were circumventing this person who was the treasurer and making financial decisions such as releasing clients from contractual agreements. Any advice on how to prevent that from happening for treasurers on the board? Is there any thoughts about that? Sounds to me like a board alignment and vision and continuity question. A little bit outside of the scope, but maybe you
Yeah.
have some experience
Yeah,
there
I'd
that you
agree.
can
This
share.
is one of those complicated board matters that you'd have to navigate delicately, I would say. Um, it comes down to, and I was reading something on this, it comes down to hard conversations, right? Like
Mm,
governance is important. Governance exists for a reason. It's very easy to think of governance as bureaucracy. And like I talked about it earlier, it's just, paperwork, but it isn't. And you need to get that message across in order to really make sure that others see it that way. And if they don't, I would consider not wanting to be associated with that organization.
Great. Thank you for that. There are a couple of Pluto questions here. Well, let me answer this one. Someone asked if we'll be sharing the PowerPoint. The recording will definitely be available for you, and the content will be available. So, yes, there are a few Pluto questions. Marco asked, is the $99 per month, is that per user or unlimited? Marco, that's a license for your organization. So the $99 is our pro plan that offers some upgraded capabilities and features, and it's for your organization. And so that is not per user. That is $99 takes care of everybody. And so hopefully that answers that.
And
Uh,
Logan, that's not the only option, right? There's the $32 option as well, right?
Correct.
Right.
That so the pro plan that you're referencing in that with that specific $99 is definitely an upgraded plan with
Yeah.
some increased capabilities. Our typical cost is $32 a month. Very,
Yeah.
very
Yeah.
affordable. And same story. That covers the organization. You don't need to worry about individual licenses.
Yeah.
Uh,
Everything we covered on the webinar today in terms of functionality, by the way, you do get in the $32 plan.
Awesome.
Yeah.
It looks like we definitely have some Pluto customers here. In fact, they're asking, Jennifer asked about payment speed and being able to get things through more quickly. Jennifer, there's a couple different ways that you can increase speed on various payment rails with Pluto if you need to. We do have Pluto Instant, which is essentially like a wallet. If you have that funded, that typically will increase the duration of funds transferring through. We also offer Pluto Express. If for some reason you need to move things through, you're able to choose Pluto Express, which moves things faster. And then also, Pluto is always working on improving the speed of our payment rails and working as quickly as we can on that. So not only is that those Pluto Wallet and Pluto Instant something that might help you, excuse me, Pluto Instant and Pluto Express might help you. We're always looking at that on our roadmap and how we move things faster through there. Lisa asked about the 2 months free and said, does that only apply for existing Pluto customers? Lisa, we're so glad you're here today. Thank you for joining us. We love our not-for-profit customers. You are welcome. I will do my best to, why don't you reach out to me and we will make sure that you get that offer as well. We'll find a way to do that for you. Let's see. What other questions are there in here? I'm kind of scanning between two places. Sonia, thank you for the Pluto shout out. We're glad to have you as a shared Pluto and Ankle customer. Um, let's see. We do have one. We better answer this one, Omar. There was a question about, do we have a duty to report to the police if we detect fraud or financial abuse?
Um, it depends on the level of certainty, I would say, but there is a duty to escalate. And it also depends on your role. I would say get a lawyer involved first, and then figure out the appropriate path there. But I would say very likely yes.
I would echo that answer. I think if there are concerns and you have evidence that there is something happening that shouldn't be,
Yeah,
that you solve that and you don't
yeah,
let that go under because small things will
definitely.
turn into big things and you
Yeah.
will regret not having managed it uh, sooner.
Yeah, the reason I said that somewhat not definitively is to just know the facts, but
Yeah.
ultimately, yes, would agree.
Someone did say that though the wait lists are long, there are some pro bono legal services that are available for our audience. So that's a good thing
Very
to keep
helpful.
in
Yeah,
mind there.
thank you.
Someone asked how you can reach us after the seminar. If I do think within very shortly you will get an email with the webinar content, and if you reply to that again, the partnership between Enkel and Pluto is active and strong. If you reply to that email with either topic or for either firm, we'll make sure that you are taken care of there. Um, Someone else asked, this is a bit of an open-ended question. Would this Q&A include questions about Dext? I have one. You could give us a shot, and we could see if we can answer that. And if not, then we can either find an answer later or you're welcome to ask that if you have one. If we can answer it, we will. If we can't, we won't. Let's see. I think that might be the vast majority of our questions so far.
I believe
I
so.
think we are. I got a note here in the comments that we're good to go. We are grateful for you. Thank you for you are in many cases dedicating your lives to others and your work to taking care of people around you. We're grateful for all that you do and your various causes, and we're grateful to get to partner with you in different ways. Omar, wonderful content. Any
Thank
last
you.
words you'd like to share with this group?
No, again, likewise, you spend so much time focusing on your mission. Please, consider how you can tighten those controls. We have definitely seen an increase in attempts, and I'm sure Logan can attest to that, just around fraud. It is on the rise, it is rampant. So please protect your organization. It is money and a little bit of time very well spent. Thank you to our clients, our mutual clients with Pluto, and thank you to Pluto for partnering with us today.
We're wishing you the best and cheering for you. Thanks to everyone and
Thanks,
enjoy the
everyone.
rest of your afternoon.
Bye.